In 2021, a 24-year-old college student turned $5,000 into $47,000 in just 3 months. Everyone called him a genius. His friends asked him for stock tips. His family was proud. And then, in just 6 weeks, he lost it all. Every single dollar. Gone. And the worst part, he didn't just lose the $47,000. He lost the original $5,000 too, money he had saved for 2 years working part-time jobs. Today, I'm going to tell you his story so that you never have to live it. His name was Noah, a final-year engineering student from a middle-class family. He had always been smart with money, saved his part-time income, never spent recklessly. In early 2021, during COVID, he started watching YouTube videos about the stock market. He saw people making thousands from their bedroom. He thought, if they can do it, why can't I? So he opened a brokerage account, deposited his entire savings of $5,000, and entered the market. His first trade? He bought shares of a tech company he had read about online. Within a week, up 20%. He was hooked. He bought more stocks, followed popular trading forums, took tips from strangers on Reddit and Twitter. And here's where things got dangerous. The market was in a bull run. Everything was going up. So Noah thought he was a genius, but he wasn't making smart decisions. He was just lucky, and he didn't know the difference. By month 3, his $5,000 had grown to $47,000. He started skipping college lectures to watch stock charts. He stopped sleeping properly. His whole identity became the guy who's crushing the stock market. And then, February 2021 happened. The crash, the painful truth. Tech stocks started falling, slowly at first, then faster. Noah panicked, but instead of selling and protecting what he had, he did what many beginners do. He told himself, it's just a dip, it'll come back. It didn't. He held on. His $47,000 dropped to $30,000, then $18,000, then $9,000. And now, the second fatal mistake. He started averaging down. That means he kept buying more shares as prices fell, thinking he was getting a discount. But the stock kept falling and falling. He had borrowed $3,000 from a friend to buy more shares. By the time he finally sold, everything was gone. $47,000, $5,000 savings, $3,000 borrowed money, all of it. He was left with debt, shame, and a broken laptop from the night he threw it across his room in frustration. Now let's talk about what you can learn from Noah's story, because he made 4 classic beginner mistakes. Mistake number 1, he confused a bull market with personal skill. When everything is going up, everyone looks like a genius. Never mistake luck for skill. Mistake number 2, he had no exit strategy. He never decided, if this stock falls 15%, I will sell. He just hoped. Hope is not a strategy. Mistake number 3, he invested money he couldn't afford to lose. His entire 2 years' savings gone in one bet. Rule number 1, never invest money you can't afford to lose completely. Mistake number 4, he averaged down on a losing position without research. Buying more of a falling stock only makes sense if you deeply understand why it's falling and believe in its long-term recovery. Rohan was just guessing. Here's the thing about Noah. He's okay today. He took a year off trading, studied finance properly, and came back with a clear head and small amounts. He says the $5,000 loss was the most expensive but most valuable lesson of his life. The stock market is not a get-rich-quick machine. It rewards patience, knowledge, and discipline. If you're a beginner watching this, start small, learn first, invest second. Because the goal isn't to get rich fast. The goal is to not go broke trying. If this story helped you, smash that like button and subscribe, because next week we're covering the one mistake that even experienced investors keep making. See you then.